Started with $1 in a dream. This one for all the people that said I couldn't do it.
Good day, chasers. Thank you guys for making it up to lesson 5. And we believe that this lesson will give you guys value. Now on this lesson, we'll be looking at the support and resistance. And in support and resistance, we'll be covering the following topics: the types of support, how to draw support and resistance zones, the support and resistance reversal, the strong support and resistance, the difference between throwback and pullback. Now let's take a look at the types of support. So now starting with the types of support and resistance. There are two types, mainly or namely channel type and line type. Now let's start off first with channel type. Let's say, for instance, okay, let's use the rate for instance. This is our market price. It moves up and it impulses, experience a correction, impulses, correction. Nice. So what do you know of the channel type? What do you know of the channel type is that the market has found a support on a critical area. We can view this point as the first support. We can view this point as our second support. And we can view this point as our resistance. So what we're meaning is that if the market happens to go down all the way up to here, the market will come and bounce on this and treat it as support. But if the market happens to go all the way up here, it will come up to this box, this channel, and treat it as resistance. It will treat it as the resistance. So what we mean is that if we look at the uptrend, in an uptrend manner, the market would impulse upwards, and then it will find resistance and then corrects downwards, find support. It will impulse upwards, find the resistance, and then corrects downwards. So from now, what are we expecting? We're expecting another impulse upwards. But now, since we're discussing the channel type of support and resistance, is that what we gauge here is this point. The market has found resistance on this point. On this point, the market has found support on this point, on this area right here. We're looking at this area, and on this area, the market has found support. The market has found support. So what we mean by this is that we're saying that if the market happens to come all the way down here, the market will experience, it will treat this area as support. And if the market happens to come all the way up here, it will treat this area as resistance. It will resist to break up here. It will support to go down here, which means it might possibly come back up. It might bounce, go back up. And here, what it means is that it might possibly bounce here, go back down. That's the channel type of support and resistance. Support and resistance on a channel type of support and resistance. Now let's look at the line type of an uptrend. So now we're looking at the downtrend example of the channel type resistance and support. The market impulses downwards, corrects upwards, impulses downwards, and then corrects upwards. So now what we're saying is that the market has found resistance on this area. The market has found resistance on this area, and the market has found support on this area, support on this critical area, meaning that if the price happens to, let me use this arrow, if the price happens to come all the way up here, it will treat this as resistance. And if the price happens to come all the way down here, it will treat this area as support. So this is our support, I mean, this is our resistance channel area, and this is our support channel area. That's in the downtrend formation. Now let's look at the downtrend formation of the downtrend formation of the line type of the support and the resistance. Sorry about that. Let's look at the uptrend of support and the resistance. Once again, if it happens that the market moves up, finds resistance, corrects, moves down here, finds supports, breaks the resistance, goes all the way up, impulses, finds the resistance, and then drops down and get back to this point. So what we're experiencing is that, let me write this down. What color is that? Impulse. Okay, impulse. That's our impulse. And this is our correction. These are our impulse and these are our correction. Okay, now let's look at the line type of support and the resistance. The line type. If it happens that the market impulses upwards, corrects downwards, impulses upwards, and then corrects downwards, and then another impulse upwards. What we mean is that we're saying that the market has found our support here, and the support here. So basically, with the line type, I mean the line type of the support and the resistance, is that we're meaning that the market has found support on these area. Okay, this one wasn't drawn. Okay, let me increase it a bit. Okay, on this and that one, and yeah, okay, and that. What we're meaning is that the market has found support on this first area, the second, and the third in an uptrend manner, meaning that this line that's drawn up here, it's support of this uptrend. It's the support of this downtrend. I mean, it's the support of this uptrend. I mean, sorry about that. So yeah, let's look at the downtrend example. Okay, now let's look at the downtrend formation. What it's saying is that if it happens, the price impulses downwards, corrects upwards, impulses downwards, because you know a downtrend experience lower lows and lower highs. So here's a lower low and a lower high. So what it means is that if we look at this point, there we go. Here's our resistance area. Here's our resistance area. The market found the resistance here, and now possibly the market would likely to turn around here, but we're not sure about that. Let's confirm with our line type. With our line type. So what could possibly happen is that once the market gets to this area here, it will treat this as resistance. It will resist to go upwards, and then it will go all the way downwards to create a lower low. That's how the line type works. That is how the line type works. But now let's see how it works in the real market, and on charts. Okay, let's look at the real-time market support and resistance. So what happens is that if it happens that the price comes from the impulses down, corrects upwards, impulses down, corrects upwards, impulses down. Here's a correction. Here's a impulse, correction, impulse, and then here we can see sort of like a change of trend. And here's our resistance area. Then now we're experiencing this. So what's happening is that now since we're speaking of the channel type of support and the resistance, and now we're looking at the downtrend, meaning that we're seeking for resistance where the market is resistant to break. So here's our resistance area. This is our resistance. And there's our second resistance area, meaning that if price gets there, it's gonna resist to go back up. Here's our resist area. And as you can see, to show that this strong resistance, once market price got up here, it resisted and it went back down here. So what we are expecting from this drop is that we can experience something like this is our support. We can experience something like market price getting back to our support, and then possibly, since it's a downtrend, possibly breaking the support and continue further the downtrend. Now let's look at the uptrend example of the real-time market support and the resistance. Okay, now let's look at the uptrend example of support and resistance. The uptrend example of support and the resistance. So what happened here is that the market experienced an impulse to the upside, a mini correction, an impulse to the upside, a correction, a deeper correction. We can't use this as a correction because this one broke its low. So this is the lowest point. And here's our impulse upwards, the correction, impulse upwards, and now here's a correction. So what we can expect here is that since this is, as we can see, it's creating higher highs and higher lows. Okay, let me use green as support. Here's our channel, support channel. Here's our second support channel. Here's our third support channel. And here's our fourth support channel. So what we can expect from price here is that since now it's an uptrend, we can expect a movement something like this to go and break these highs. As we know, it's an uptrend, and an uptrend moves in a higher high and a higher low position. So you can see that this is a higher low. It might go up, possibly go up, break the high, and then create a higher high. So that's the channel type of support and resistance. Right. One thing that you should know is that you should always add weeks in our analysis. The weeks are very important. What do I mean? Okay, let's take a look at this kind of candlestick formation. In an uptrend, something like this happens. You get caught up in something like this. And then, there we go. There we go. And okay, let me set weeks up like. There's a week. Here's a week. Another week. And a week. So what we mean by saying this is that this point right here will be our resistance. This point right here will be our resistance. Like we at the highest week, at the highest point, like this week here would be our resistance. And because some people, like, the analysis would be wrong. Just that I wouldn't say that analysis is wrong, right? But then drawing your lines or finding resistance in between candles is not an accurate way. So this point right here would be our highest point, which will be our resistance, and vice versa for the support. If you find something like this, okay, let's say the candlestick color, it doesn't matter to us. Okay, there. There we go. There we go. There we go. So what we mean here is that the lowest point, this is support and this is resistance. On support, the lowest point, which is this, is where price has tested as support. That's what we mean. That means this low point is being treated as support, whereby then it means they're only drawing our analysis or our lines, whether it's support, the channel or the line type. We'll treat this point as our support due to it being our lowest point. Not this point, but in this point. Okay, Jesus. Now let's look at what we call support turns into resistance, or resistance turns into support. Let's take an uptrend for this scenario. Here's an impulse, correction, impulse. I missed that. Okay, correction here. Then your impulse and the correction. So what the term support turns into resistance means is, let's use green as support. Here's our support channel. And we had this one as resistance. We had this as resistance. There we go. So what the term actually means is that once price is able to breach over resistance with an impulsive candle or with impulsive momentum, it's much more possible that price would come back down and test resistance. I mean, and test that same resistance, but then now in a support manner, meaning that time, the first time it was resisting for it to break, but then eventually it broke through the specific channel or point or area, and then next time when it comes back, it will come back and test it as support, meaning that we can expect a movement like this. That's what we can expect on this point. This is what we call support turns into resistance, and this is the scenario of an uptrend. Now let's look at the downtrend scenario. Okay, Jesus. Now let's look at support turns into resistance in a downtrend scenario. We've got an impulse here, correction, impulse, correction, and what are we expecting now? An impulse. Let's say the market gives us that. So what we can learn from this is that let's use a channel box, for instance. Here's our resistance. Here's our resistance. Here's our support. Okay, let me use green. Here's our support. Here's our support. So what the term support turns into resistance means is that once it breaks through this price, once it breaks through this area in a strong manner, like it pulses downwards, and then it comes back up and tested, it will now be tested as resistance, no longer support. Meaning that here's our support and here's our resistance. Our first point to show that it's supporting into resistance is that our first point is standing here. We've got our first point of support, and now that it's coming back to test it again, it's coming back as resistant, no longer support. We'd say it was support if only it came back to test it from the top side, came back, tested, went up, but then now it came back from the bottom side, came back, tested, went up. So you can see this as being resistance, and from here we can expect a movement like that could create our lower low. That's what we call support turns into resistance. Okay, Jesus. Now let's look at strong support turns into resistance. Strong support, because there's different types of support and resistance. There's strong ones and weak ones. Okay, let's look at what we mean by saying that. Here's our downtrend, impulse down, pull correction, price comes back to test that support. Okay, let me draw the support here. Price came back to test support here, but it couldn't break through. It couldn't break through. Support can break the resistance here, and then breaks that support. Breaks that support with an impulse. So now we're looking at impulse, a deeper correction, and then impulse. And then price would come back here. Treat this as what? As resistance. As resistance. But now the reason we're saying that the reason we're saying that it's strong support turning into resistance is that we're looking at, here's the first point, here's the second point, and now this is being tested as the third point. This area, whenever price gets on this, at this area, the specific area, at the specific channel, it reacts in a support or resistance manner. And we've got the first point, the second point, and now it's the third point. It's the third point. Once price gets tested 2 or more times, it's now, we can now say that it's a strong support or strong resistance. If price gets tested at an area for 2 or more times, that area is solid. That area is a critical area. That's why we say this is strong support turns into resistance. Now let's look at strong resistance turning into support. We've got our impulse upwards. Here's our correction. And price couldn't break this point, this level here. So we see that, okay, this is a critical level here. Now, what happened is that price went all the way up, couldn't break here. It couldn't break, treated this as a resistance, so it came all the way back down again. And then now it comes back up and then it breaks this level here, it breaks it. And eventually, when it comes back down to test this level will be treated as support, like how we spoke about in the previous chapters, support. But now, this is now strong resistance turning into support. What makes it that? What makes it strong resistance turning into support? Okay, here's our support here. The reason we say that it's strong resistance turning into support is that we've got 1 point and our second point. And now it broke at our third point, not the second point, it broke at our third point, and it tested now our fourth point. So what it means is that price tested on the specific price, on this specific area for more than 2 times, which makes it strong resistance turning into support. Okay, now I want to explain the difference between a throwback and a pullback. The difference between a throwback and a pullback. Let's say, for in case we've got a ranging market. Ranging market meaning that it's moving in doesn't have any specific direction. Doesn't have any specific direction. Comes back here, treats it as support. Correction up here, resistance. And then something like this happens. A breakthrough. Now, if it happens that it breaks up the resistance in this manner and it comes back and test this as support, this is what we call a breakthrough. I mean a throwback. A throwback, sort of like retesting. If it breaks the resistance and then comes back down to retest the resistance, but then as support now. It's now resistance turning into support. Breaks it, comes back down to test it. It's now what we call a throwback. And now we're expecting something like this. And in scenario 2, if it happens that the market price came resistant, came all the way down, done something like this, broke here, but then came back down to test this point, to go all the way down there, or I don't know, but then it breaks the support and then comes back down to test it as the resistance, it's what we call pullback. Then we're expecting a movement like this. So in short terms, what I meant is that if price happens to break resistance in an uptrend, it breaks resistance and then it comes back down to test it as support. That's what we call a throwback. And if price happens to break support, comes back up and then retest it as resistance, that's what we call a pullback. That's the difference between a throwback and a pullback. Okay, Jesus. Now let's look at a failed resistance area. Let's say price impulses up, comes back down, and then moves up in something like this. What is that? In something like this, gets to this point. Okay, let me draw a channel here. Let's say in this manner, color, let's not mind the color. Something like this, yeah. And it comes back down, and then it breaks through this point, this resistance area. It breaks through. Here's our first point, here's our second point. It breaks through with the third point, with the third touch, it breaks through. So it means that this is a strong resistance. So now we're expecting something like it comes back down, it throws back and comes back down like this. We're expecting a movement as this should treat this critical area support. That means we're expecting something like this. We're expecting something like that. But what happens in this manner is that price would, if it happens that price goes all the way down and doesn't treat this point as support, and maybe does something like this and then something like this, we'd see this point as no longer valid. And then we can move on and find out the new support and resistance areas. Because what it means is that this point, it was resistance, it found resistance, but then with the current market price, or with the current market price couldn't detect this as any critical area, meaning that it never respected this area. So why should we use this area if price doesn't respect it? So we move our channels and then we draw. Maybe this could be our next resistance area. Let's look at what happens in the support type of this kind of scenario. Okay, what happens is that price, it's a downtrend. Let's use a downtrend for instance. Price impulses down, corrects up, mini correction, and then it comes back down, test this point and treats it as okay, let me use color so I don't confuse you guys. It treats this point as support. The point was treated as support. Okay, what was that? Okay, yeah. Here's our resistance area. And price came back up. Like it comes back up, let's say mini correction here, and then it breaks through here. So now price is here. Price happens to be here. Now we think that, okay, we'd possibly say that this is a strong resistance area because it was a support. Why it touched here once, twice, support turning into resistance because it broke out here impulsively. So now we're expecting this to be a strong resistance. But what happens is that it does something like this. Okay, I don't know. Then maybe at it, something like this. Then this point here, this point is no longer valid. This critical area, actually, it's no longer a critical area. Like I said, it's no longer a valid point. It's not like when price gets there, it doesn't respect it as it used to. So meaning that price found support elsewhere. This could be our next support area. This is no longer our support area. This could be our next support area. And then that's for us to say confidently that our price is on a significant area is that something like this could possibly happen. Let's say it's a downtrend, here's an impulse, here's a correction, fails to break, a mini correction, breaks impulsively, retest. Okay, let me draw this. We found the retest there. Okay, no, let me use green since it was support. Okay, support, it's now retest. And it happens that price does something like this. Something like this, and then breaks through here and comes to test. We can positively say that this is support, and this could happen because what we're looking at is at this point, this here is the same thing as we said in the very first when you covered this topic, when you started covering this topic. It's the very same thing that we said: when price moves up, corrects down, moves up, corrects down, finds support. This used to be resistance, now it finds support, and then it continues to impulse up. So this is still a significant area where you can say support turns into resistance, or resistance turns into support. And there are different types, since you know the channel type and the line type. So what the channel type is that price can last as long as it can last, like up until it doesn't respect that point no more.
Thank you guys for watching this lesson and getting value out of this lesson. We're looking forward to having you on our next lesson. Thank you.